Welcome back to Wall Street Confidential. Jim, I think we're seeing a Santa Claus rally here. What do you buy when stocks are going up on bad news?
Well, I mean, this is really the talk of all hedge funds right now, other than Madoff, which is that you can buy an Eaton, which I own for ActionAlertsPlus.com, in the throes, in the wake of a pre-announcement. Ingersoll Rand today, it looks like you want to buy Ingersoll Rand, even though I just really hate what they did. They bought this train. Let me give you another way to play it. How about some ones that didn't pre-announce but actually did a good job? Those should really fly. Honeywell and General Mills, which is an ActionAlertsPlus.com name. Honeywell in particular, which is one that I was looking to buy for Action Alerts, is a company that was so linked to aerospace that I figured that it couldn't possibly make it, but the company's really well run by Dave Cote. That one makes sense. I know people are reluctant to own GE, a name that I like and own, but I think that GE fits that depiction too. So, this is a big sea change. Now, I want to make a point. This is a Santa Claus rally. It is not a 2009 rally. I think what you'll see, and we're seeing it in tech right now. I mean, for instance, a negative piece about Intel and Jefferies. Like, the reason why Jefferies writes that piece is because they're worried about the fundamentals and they're not paying attention to the stock action. And the stock action is so bullish that you would think, well, wait a second, Jefferies is wrong. What I think Jefferies is doing is giving you an opportunity to realize that you should be scaling out while people get in. With the industrials, I'm reluctant to say that, given the fact that Nucor pre-announced at 30 and it's at 47, and U.S. Steel basically pre-announced at 28 and it's up 15. So what worries me is that you've already missed those. So do not go after those. But you can go after the immediate ones, and I want to focus people on Eaton. I want to focus people on CAT just in case they pre-announce the end of the year. These are the plays that are the Nucors and the letter X's, so you got a good template there.
So what happens in 2009 when the Santa Claus rally is over to an Eaton?
Well, I think that the sense is that you have to have a global turn. Now, the ones that are big users of oil obviously could still have higher margins. The reason why I mentioned General Mills is because they have a big, there's a lot of oil that goes into what they do, both packaging and the glassine wrapper inside that it's inside a box. Plus, they've been hostage to ethanol. That's going to come down. If you're U.S. Steel or if you're Nucor, actually more specifically if you're Nucor, they're a big user of scrap metal, and that's crashed. So you have a nice, and they use a lot of energy. So that one works. But for the most part, like when you buy technology, the earnings are going to be really bad and the guidance is going to be bad. So those are great sales into the end of the year.
All right, thanks so much, Jim.
Thank you.
That's your Santa Claus rally in the beginning of 2009. And of course, you can trade with Cramer every day. Email us at action@thestreet.com.